Investors should be cautious about any and all stock recommendations and should consider the source of any advice on stock selection. Nothing in this broadcast is an offer to buy or sell any financial instrument, including but not exclusive to stocks, options, etc. This show is for entertainment purposes only. All investors are advised to conduct their own independent research into individual stocks before making a purchase decision. In addition, investors are advised that past stock performance is no guarantee of future price appreciation. So it is December 4th, 2017, Monday. Let's get started. This is the big show. It was an interesting day on Wall Street. Now, first of all, you guys know we did not do a show on Friday. We had some scheduling conflicts, so we'll catch up on you on what we did on Friday too at the same time. But it's an interesting day. So Friday night, late Friday night, the Senate passed the Trump tax reform, and we saw a nice rally today. It was a real strong early rally. You see the big old gap here. This is a 7-day chart of the S&P 500, the spider. You can see we had a big gap up here. Then we had a reversal, even a technical reversal with the engulfing bearish. And you see it just came back down from there. So let's go. Let's reverse back to Friday real quick, and let's talk about what we did on Friday. So you saw on Friday, had the whole tax reform thing again, the euphoria of it pushing the market up, and then the fake news hit, right? The ABC News article. That just crapped on the market. You can see that big red bar here. So, we were talking about the previous days, what we were playing. At that time, we had two shorts in the S&P. We had a long on oil, and we had all the other normal stuff that we've been playing, the XLP, the XLU, uh, and that other stuff. So, what we did was when this happened in Friday morning, we cashed out the OIH long, which we were talking about for about the past few days. We cashed that out at a 220% gain. Then when this hit, we cashed out our spider short, one of the spider shorts. We cashed out the short term ones, the ones that were expiring this Friday. We were paying some weekly lottos on those. We ended up with a 136% gain. That was in about 2 days. So, the streak continues. We are now 15 for 15, and the last two were over 100%. So, bam. But that's not as good as it gets. You can see, the rest of the day was, a nice trickle back up. Once the market disseminated the information and realized what was going on with that ABC News report, it's easily started to recover. So if you sold in here, you made a big mistake because by Monday morning you were up here again. Um, we did not sell our second set of shorts, and that's the 257s. The puts at 257. We're still short retail at XLP on that $39 puts too. So those are the trades we're still carrying. We're also still carrying half of our XLP. We sold, how's this? So we sold half today at 600% gain. So now we are 16 for 16 on the last 16 trades, and we've got three plays over 500%. So we're doing pretty good. Are you guys doing pretty good? Look, this whole tax reform stuff is doing wonders for the market. It's becoming more and more a stock picker's market, which means you can't just throw a dart at a board and come up with a winning pick, like you could probably for the last couple of years. Tech. Tech is really struggling right now. The Nasdaq was down again today. Let's go take a look at CNBC real quick. You can see the S&P finally closed down about almost three points after being up huge. I think it was up at almost 17 points at one point. The Dow, which was easily up over 300 points, ended up only at 58. You can see that sell down in the second half of the day really affected the markets across the board. Even the VIX popped up back above 11. So, it's interesting. There's still a little fear building into the market. Is this the end of the rally? Who knows? We play day to day right now. Nasdaq again, big 1% sell-off. Your Facebook, your Amazon, all your big FANG stocks really took it on the chin today. So that shows you that it's becoming more of a stock picker's market right now. So you've got to be aware of these things if you're going to be an effective trader. For a while, you bought a Netflix, you waited a few weeks, you made all kinds of money. It's not working like that right now. So you've got to be a stock picker. You've got to do your research. You've got to disseminate your information. So you guys be very aware of that. As far as the news went today, well, let's talk about Bitcoin first. Bitcoin got over that 11,000. It actually started moving up to 12,000. This is a 7-day chart of Bitcoin. So you can see Bitcoin, same story again. If you had bought 7 days ago, you would have bought it about 9,600 and you would have made almost $2,000 per Bitcoin. So, it's the gift that keeps on giving. But here's the big news about Bitcoin. On Sunday, the CBOE, the Chicago Board of Exchange, Options Exchange, will be issuing the first Bitcoin futures contract. So we'll see how that goes. For us at Financial Reboot, now that's right into our forte. We're options people, we're stocks people, we're things like that. Cryptocurrency, as exciting and fun as it is and profitable, we like to think we were smart enough not to get involved in something we didn't understand. Of course, it's easy to say, well, all you have to do is buy it and it'll go up, but it doesn't always work like that in financial instruments, and we know that, and we're not willing to take the chance. So now we have a vehicle that fits right up our alley. And for you guys too, a lot of you people out there that watch the show, it's just unfamiliar territory, cryptocurrencies. So I know a lot of people that we get messages from and comments from all say the same thing. I want to get in, but I'm just not sure. So now we've got a vehicle that fits our trading style. So we'll keep you guys informed on that. For now, we're just going to be spectators on Bitcoin. We're going to enjoy the charts and things like that. We're going to try and make something out of them. But really, with Bitcoin, it just doesn't matter. It has bad technical charts. It goes up $3,000. It has a beautiful, beautiful chart. It goes down $2,000. It's really, really hard to predict. And the technical analysis, and even on the message boards and stuff, the whole team, we like to read the message boards, the stock trading, and especially the Bitcoin, because it's so fun. There's so many new investors in Bitcoin that watching their comments are really fun. And you guys, if you guys are experienced traders, get into it, man. It's just a lot of fun. And it's great to see people make money. You know what I mean? At Financial Reboot, we're very successful in our trading. One thing we like to see is we like to see everybody make money. It's fun to watch people make money, and Bitcoin is where the money is. But with this tax reform, that's enough with Bitcoin. But with this tax reform, what it's really hitting is the banks. You saw a lot of good action from a lot of banks today, like Bank of America, Huntington Bank shares, which is something that we've invested in the past. If you've been with Financial Reboot for a while, last winter we had a bunch of options in Huntington Bank shares and Bank of America, and now this winter we're sitting on the shares from those. We've got a ton of free uh, Huntington Bank in the accounts at about $9, and we've got a bunch of Bank of America anywhere between $18 and $20. So those are doing really well. Great dividend payers, strong banks, and it looks like there's more to go. Let's take a look at XLF now. XLF is the uh, financial sector. The ETF for that. So we're on a 7-day chart here, and you can see with this tax reform, look how it just pushed XLF up. And of course, XLF is all your financial stocks, your Bank of America, your Chase, and Morgan Stanley, and all those big boys. So, do we want to buy here? We thought about it today, and we really looked at the trade, but we didn't see anything we liked, so we stepped back from it. It looks like it might be a little overextended anyways. Always remember something with stocks and with the market in general is that, you know, they push to new highs and then they need to consolidate a little bit. Maybe a pullback, maybe to get some of the longer shareholders out and some new fresh money at a higher level. That's just the natural order of things. So, it's almost always prudent when you get a big run up like this to kind of step back and see how things settle before you make a play. That's at least one of the things we do. So you can see financials doing really well. We're looking at a bank play, a mid-range bank. We'll let you guys know tomorrow. We haven't decided to pull the trigger on it yet, but we're definitely looking at a play. We think we found a real good one, and we think it fits into that Huntington Bank share mode that we had from last November, where we made a whole lot. We made a lot of money on this trade. It was a mid-level bank, and this one we're looking at is a mid-level bank too. So stay, tune in tomorrow. Um, like I said, with the news, it just wasn't a whole lot, especially after Friday. I mean, really, how much more dramatic can the news get than it did on Friday? We've got the CVS Aetna deal, and CVS was down real big today. Is it a good investment? We're not sure. That's something we're not even getting into. It's more Obama, things like that. Facebook reportedly wants to spend a few $1 billion on streaming sports. You should get into football, man. I hear it's lucrative. Schumer and Pelosi, this was the most interesting news of the day. After that big drama last week with the we're not coming to your meeting and stuff like that, now they're going to meet with Trump. And the reason is we're really at a really sensitive spot right now with the Republicans and the Democrats. And you have to kind of take this with a grain of salt if you're a liberal right now. Eh, this whole tax reform, because of the way the Democratic leadership handled this, they're getting left behind. If this tax reform goes through, the market keeps pushing into new highs, people start making more money. The Democrats are going to be on the outside looking in, and we've got midterms coming up in 2018. This could be the nail in the coffin for the Democrats. Now, you remember how they were starting to twist momentum into their direction, and all of a sudden they just let it go. They really shouldn't have. And this is from an independence point of view. What they should have done, they should have sat down with Trump. They should have put their emotions on the side. Everybody's a little too sensitive right now. And you can't cut off your nose to spite your face. And that's basically what you're doing when you get pissy about something somebody said. You just say, I'm not going to show up to the meeting. And that's really what happened if we're honest about it. So we'll see how that meeting goes, right? Last time that Trump, Schumer, and Pelosi met, I mean, they came out in a love fest, right? So let's see how that works. And you just curl down, more nonsense, 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 nonsense. So there's the big news for us in the trading room. We are huge House of Cards friends, and bam, House of Cards is back. If not to get into the fan side of the show, but all you people that watch it religiously like us. I mean, you remember the last episode? I mean, come on, it's time for Kevin Spacey's character to be out of the picture anyway. So this might have worked out. The timing might have been not a, there might not have been better timing for the show. Anyway, so you guys trade cautious out there right now. We're pushing to new highs. We're just really, everything's just exploding. Everything's very euphoric right now. That's generally bad medicine. So you guys stay cautious right now. That's why we kept that one short in the S&P, and we're still short retail. Retail actually today got back up over, I believe, $44. Let me just check for you. 44.40. It closed up $1, another 2%. So, the trade, it's a little scary right now, but, we're way out on this, and we might average into it, we might not. But we still think there's a big crash coming from retail, so we're going to stick with that for a while. And plus, too, when you're cashing in 4, 5, 600% winners, you can afford to carry a laggard a little longer than you usually would. And that's what we're doing. But you guys be very cautious trading, be very cautious, be very picky about what you put money down on long. Right now, long is still the trade, long is still the trend, but let's be a little cautious and a little more detailed about what we do with our trades right now. We'll keep you informed on what we do. Um, so in case you want to follow along, now don't forget, if you want the ultimate in guidance, sign up for that newsletter below. Right now it's got a $7 first month, and I'm not sure what the monthly fee is, but you get a whole bunch of good stuff with it. And you get our trading team, right? All this stuff that you wait to watch on Facebook and have to disseminate out of my presentation, you would just get in a simple 2-line text. All right. So you guys have a great afternoon, Facebook. Thank you all for joining us. This trade very cautiously right now. Remember the thing we were talking about last week too, about how buy the rumor, sell the news. We're getting to the news part of this tax reform. So there could be a little wash coming. We don't think it's the end of the bull market by any means, but just be cautious, especially for you short-term traders and you swing traders, okay? You day traders, business as usual. Long-term traders, I would say business as usual also too. So you guys have a great afternoon. We'll talk to you tomorrow. Aloha from Kalihi.